Welcome to Achieve Wealth through value-add real estate investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals. Now, here's your host, investor and author, James Kandasamy.
Hi, this is James Kandasamy. Thank you for listening to this podcast. I appreciate you. I know I provide a lot of value through this podcast, and I want you to share it with your friends, with your families, and anybody else that you know that kind of benefit from listening to this kind of content. Go and share it through Facebook, through LinkedIn, through Twitter, through Instagram, or any other channels that you want to share it, because sharing is caring. Thank you. Let's go on with the show.
Hey, audience and listeners, this is James Kandasamy from Achieve Wealth through value-add real estate investing. Today, I have Jorge Abreu from Dallas, Texas. Right, so I've known George for some time right now, and I'm excited to have him on my podcast. He has a very strong background in construction. We go dive deeper into it, but we'll talk about a lot of other things as we move along. Hey, George, why not you say hi to our audience?
Hi, I'm also excited to be on here. I've known James for a while, and so when he reached out, I was pretty excited. So looking forward to adding value.
Absolutely. Yeah, adding value is where the name of the game, right? I mean, people love adding value in real estate. You see so much people adding value. Of course, there are some people who are like, they claim the abundance mentality, but they said, no, if you want to learn this, you come and pay me a big bucks to learn, right? So
Abundance with payment.
Yeah, but they go around telling everyone, they are the biggest abundance mentality, right? So, but anyway, there's so much of podcasts, so much of forums, so much of Facebook group out there, you can learn so many things. Of course, that's, to take the next level, you always need a lot more extra direct contact and direct coaching, but, a lot of information's out there, right? So tell us about, what do you do? I mean, how did you get started? Then we can go into a bit more detail on that.
Yeah, so what I do now is full-time multifamily large acquisitions, and also do some land development. But where I started was about 15 years ago. Started doing single family investments. I was really attracted to doing the fix and flips and wanted to scale that. In doing that, I ran into a couple bumps on the road with contractors. And that's when I decided to open my own construction company. That was maybe about 11 to 12 years ago now. And it worked out well. We were able to scale, and we're averaging maybe about 40 or so flips a year. And then
are you still doing flips?
Say it again?
Are you still doing flips?
I stopped doing single family about
okay.
When I decided that I wanted to focus on large multifamily. I tried doing both in the beginning, and I felt like I was stretched too thin. So went all in on the multi.
Yeah, now we do the big flips, right?
Yep.
It's still a flip, but it's a big flip, right?
That's right. And then I dabbled into the journey. Kind of led me into development, and did some single family, and then some smaller multifamily. And then that led me to about 4 years ago is when I was first introduced to multifamily syndications, and being able to acquire these 100+ unit apartments without having to bring millions and millions of dollars yourself, where you can partner with others and syndicate the deal. So right off the bat, I mean, I love the concept. I love the fact that you have the scale built into one single property. And I was sold. So
good. So what attracted you to syndication?
I don't know if I was really attracted to syndication. Just I was more attracted to the large apartments.
Okay.
And then, without having, at least at that time, without knowing any partners that could come in with the equity needed, syndication was the tool to be able to do that and raise the equity.
Got it. So what are the market you are focusing on right now?
Right now, so I'm out of Dallas, Texas, and hard to find deals in Dallas, but still looking. We've got one property here in DFW, and we've got quite a bit in Houston, so we've been able to still get in at a good basis in Houston, and the fundamentals are there. So still looking pretty hard there and closing on some deals. And then other sub-markets throughout Texas, Oklahoma, some of the Oklahoma City, and then we also own one in Lawton, Oklahoma, which is a smaller city. We're closing one in Georgia, Augusta, Georgia. It's a good looking market. Closed a couple in South Dakota. And that's it right now.
So how did you choose this market? Because it looks like you've been in quite a different market. Right? I mean, within Texas, yeah, Dallas, Houston, probably, there will be some differences, but you went to Georgia, South Dakota, Oklahoma. How did you go into different markets?
No, it's a good question. We started in our own backyard, and with Dallas being as hot as it was hard to get deals to pencil. So that's when we started looking outside of our backyard, but still staying within a 2-hour, 3-hour drive. So that's how our first couple deals were. And then as we implemented systems and became more comfortable with the process, that's what allowed us to kind of come out and look at, kind of go after the deals. Right now it's hard to find deals, so I don't want to limit myself to saying I only want to be in this location. So I know the criteria we want to hit, property wise and location wise, and if those are met, then I rely on my systems to kick in and be able to go to a different location.
So do you underwrite all deals everywhere in the nation, or I'm trying to see,
So
yeah, how do you do that?
Yeah, so I mean, we have our top markets that we're looking in specifically, and we're searching to acquire deals in. And then at the same time, I have other individuals that bring me deals, and they're doing the first round of underwriting, and then when they bring it, and then we'll do internally our underwriting. But I guess to answer your question, it's not like we're looking in every state, at least not internally. It's just when others bring us deals.
So what do you look for in a deal? When, let's say, somebody give you a deal, what are the first thing that you look for in a deal before you throw it out? What's your sniff test?
Yeah. I mean, the first thing is the location. So if it's not a location that we've already deemed as somewhere we want to be, then it's okay. I need to look into the numbers and see what's the growth look like, what's driving the economy, is it diverse, those kind of things. And then once I've checked all those boxes, then it's move on to the deal. And as far as the deal, I want to make sure it's got the value add component, like a true value add, that we can come in and increase the value some way, whether it's through operations or income. And then it's looking at the returns, as far as how we're structuring the deal, what price we're coming in at, do the returns make sense?
Okay, so let's go into your underwriting criteria, because you look for the value add. So what are the value add components do you look for in a deal when you're underwriting a deal?
Yeah, I mean, the number one is the rents. Where are the rents compared to the market rents? Is there a gap there, a loss to lease? Is there room? Does the market call for upgrades and getting rent bumps with your upgrades? That's number one. And then from there, then we start looking at the expenses and how the property is being managed. Is something reviewing the financials and reviewing all the data. Is there something that stands out that we know we can do better? And then we go to kind of other income or just little things we can do to bring in more income.
Okay. What about expenses? Do you look at expenses in detail?
Yeah. We look for anything that stands out that's not in line with the norm. If they're paying double what they should be paying in payroll, we'll dig in. Why is this, and do we think we can do better?
Got it. So you are in different market, right? Like Texas, Oklahoma, Georgia, South Dakota. What do you see as the is there common expenses that everybody share, across any states, they always have a problem, or is there every state has their own expense, something is wrong in some state, in some expenses?
Yeah, no, it definitely adjusts where you're at. Obviously taxes depend on where you are. Same with the payroll, we're just talking about payroll. There's other areas you're going to have to pay more to get a good staff than others. Even down to repairs and maintenance, labor is cheaper in other areas. So you got to take that into account. We look at from experience, right? If we're in that area already, and then we also pull reports from CoStar that lay that all out, what the averages are.
Interesting. So what about expense ratio? Do you see like each of these states having different expense ratio?
It does vary a bit, yeah.
Okay, any specific?
I don't know off the top of my head like which ones.
Okay. Okay, good.
But yes, you do see it vary.
You see variance. Okay, so what about using your background as a construction specialist, right? You have your own construction company. How do you think that has added value to your syndication?
It helps us feel confident, one, when we're making offers, that we're not just guessing on the CapEx. We've got pretty educated numbers in there as far as the CapEx and what the property needs. So that essentially gives us, I think, more of an edge when we're submitting our offers. We feel more comfortable if we need to go up a little bit on the offer, and then that also translates over to once we acquire the property, that we can execute on the business plan. We can complete the CapEx quickly and good quality.
What is the most common CapEx expense that the normal people, the one that doesn't have construction experience, get it wrong?
I'd want to say plumbing. Hopefully, I've talked about it enough to where maybe some people are catching on, but yeah, plumbing can really catch if you don't catch it during your due diligence, and you take over the property and you start having all these issues with your sewers backing up, and then you realize that you have broken lines underneath. It can get pricey.
And is that specific to like some year build in terms of some apartment, or is it across all new build?
Yeah, no, I mean, definitely anything 80s before 1980s. Your PVC didn't start getting installed till I believe early 80s, maybe late 70s. But so you're gonna have cast iron, or you may even have clay sewer pipes, and those tend to have more issues. And then if you throw on top of that, in Texas, with all the foundation shifting, it's not a good equation to have when you add the plumbing lines that are already doing bad, and then the ground shifting, you're gonna have a lot of cracks and separation.
Yeah, it's is it a Texas problem, the foundation? I thought, I'm not sure. I mean, I only did houses here in Texas, but is it just a Texas thing, or is it like nationwide? There are some area you have a lot of foundation issues.
Specifically in Texas, the soil definitely shifts a lot more. I'm originally from South Florida. Your foundation doesn't move in South Florida. Like
Really?
you're sitting on, bedrock. Like
Bedrock, yeah. You're probably in a big rock, right? So
yeah. Oklahoma, you do have some issues too. So yeah, it's not just Texas.
got it. So what kind of I mean, I know you do apartments, right? So but what kind of apartments do you look for? How at a high level, give me some characteristic of I'm sure you said you do value add, but what are the other characteristics of apartment that you like to buy?
Yeah, we like to be at 100 units minimum. We'll maybe look at something a little bit smaller if we have a property nearby. Mainly C class. We're starting to do a little more B class as well. And then, I don't really have, I know other investors that won't touch flat roofs, or they won't touch something with a boiler or a chiller. Not a huge, boilers don't bother me so much. Not a huge fan of chillers. Roofing is fine either way, flat or sloped. As long as you're inspecting it during your due diligence and you know what you're getting into, I think it's fine.
Yeah, I mean, I'm not worried about flat roof, even though I think I only have one deal which has a flat roof. It's doing fine. It's not it's not a big deal. I mean, you're right. I'm not a fan of chiller system as well, because I never bought one, but I know it has its own nuances to it, right? Which can be not the best experience for some of our residents there, right? So
Yes.
So talk to me about some of the land development that you said you are doing.
Yeah, I've started land development a while back, but been turning it up a little bit more lately, just with the pricing, where some of these prices are going, with a C class. I'll use Dallas as an example, but there's C class going for 100 plus a door. So you're talking about a property that was built 60s, 70s, going for $100. I mean, $100,000 a door, when you can build it for just a little bit more. So that's where I feel we're at right now as far as how the pricing is going in the market. So got a couple land deals that we're working on right now. Got a 276 unit one that's we're just working on getting under contract. And then we have another one that was actually going to be multifamily, but with the pricing of lumber and cost of materials going up, we actually flipped it to single family, and we've got a builder that's going to purchase it. Once we're done with the horizontal construction, they're going to come in and take over from there.
Got it.
I don't do single family anymore.
Yeah, it's a different paradigm, right? So, but is that all in Texas or is somewhere else?
That is in Texas. So as far as leveraging our construction company, we only build in Texas. We'll do renovations throughout the nation at this point. But new construction, we stick to Texas. Not that we wouldn't look at something outside of Texas, we just wouldn't be able to build it in-house. We'd have to hire a GC and just manage it that way.
Got it. So where are you going with your whole, buying multifamily, doing development? What's your end goal? Let's say right now, 40, 50 years from now, where do you want to be?
My end goal is to continue to grow right now. Definitely in growth mode, to the point where I can start bringing in more of the components in-house and have more control of everything we do.
Now, what's your end goal?
And go, okay.
Yeah. You can bring next year you can bring property management inside in-house, right? But I want to look at it 40 years down the road, where I want to be.
Gotcha. So, I'm looking to build something huge, man. I want to have a very large organization where we've got 60,000 units or whatever it is. And at that point, I'm maybe attending a meeting once a week. Well, I don't know. You said 50 years from now. Hopefully, I'm not attending any meetings, I guess. At that point.
Okay, maybe 30 years from now, I guess. Well, I'm just looking at I know we're buying a lot of deals, but where do we want to go end of the day, right? So let's say maybe 15 years from now, where do you want to be?
Yeah, I want to have a very strong organization with large portfolio. Building that legacy and really leaving my children with something great.
Okay, that's good. Why do you do what you're doing right now? Why? What's your why?
It's my family. Yeah, 100%. Everything I do, I've got 3 little girls and my wife, and everything's for them.
Got it. And is there a proud moment in your real estate career that you were really proud of? That one moment that you can always remember, and you are really thinking, I'm really happy that I did that.
I'm kind of torn, I guess, between the first large multifamily that we closed. That was a lot of work went to get to that point, a lot of education, underwriting a lot of deals. That was a good one. And then I'll throw in a second, just our first new construction project that we completed. Taking something from the ground up was nice.
Got it. That's awesome. All right, Josh, why not tell our audience how to get hold of you?
We've got a ton of information on our website. So elevatecig.com. If they want to shoot me an email at George or Jorge, Jorge, at elevatecig.com. If they mention this podcast, I'll shoot them over some free content I have.
Okay. Awesome. All right. Thanks for coming on the show. Very happy to have you here and share your experience and, adding value to our listeners.
Thank you, James.
All right. Bye.
All right. And there's one.
Oh, yeah. That's another why coming in, right?
Yeah. Right in time.
All right. Okay. Bye.
All right. Take care.
That's it for this episode. If you'd like to learn even more, check out James's free audiobook. It's the audio version of his best-selling book on passive investing. You can get the audiobook completely free, along with other valuable resources, by visiting www.achieveinvestmentgroup.com/free audiobook. Also, be sure to join our Facebook group too. To find it, just do a Facebook search for Multifamily Investors Group. Thanks for listening. Join us again for another episode next week. See you then.